Hey everyone, welcome to this episode of A Good Problem to Have. I'm your host, Tyler Olson. This is part 4 of an 8-part series that's specifically for you new interns. We have spoken about filing taxes for federal student loans and federal student loan decisions in general. We spoke about private student loans and other types of debt and what to do about it. Last week we spoke about disability insurance, term life insurance, and umbrella insurance. Today we're going to be talking about employer benefits. You get that packet, that PDF, and you're like, what do I do with this? Is this important? The answer is yes, it absolutely is, and deserves your time and attention. You have a lot going on the next couple of months. This deserves an hour or two of your time because there are additional benefits embedded in this packet. Depending on your employer, they might be really great or they might be mediocre, but you've got to look into it to make the best of your options. It's primarily referring to health insurance choices, group disability and life insurance, access to flexible spending accounts and health savings accounts as it relates to qualified medical expenses, and retirement plan contribution matching. There are other optional benefits too that may exist. They're not a ton for trainees because usually there's a different employer benefits packet for trainees as opposed to faculty. So when you get out of training, there'll even be more options having to do with like legal services and additional retirement plan access. Those are not likely to be relevant for you at this time. So let's talk about those 4 areas. First, health insurance. You may, if you are in the world of personal finance, in your research online on social media, you've likely heard of the health savings account. The health savings account is a relatively new tool that is it's an additional account type that you can access if you're in a high deductible health plan. And there are stipulations on what is a high deductible health plan. It has deductible minimums, it has out-of-pocket maximums that the plan or that the policy must fit between. And so when you look at what your employer offers, it should be fairly obvious if there is a high deductible health plan available to you. It will say HDHP, high deductible health plan. It might say HSA qualified. And in any event, you'll see that. And if there isn't a high deductible health plan there, then this part is not relevant to you for this employment segment, because you can't get a health savings account if you don't participate in a high deductible health plan. There are some tax benefits to putting money in because you can deduct the contribution off of your taxable income. You can use the funds for medical expenses tax-free. And if you don't have medical expenses, you can leave the money in there and it rolls forward year to year. It can even be invested. There's multiple benefits to it. However, you must start with the question, what do I, and if you have other family members, what do I and my family need from a healthcare standpoint? Is our usage of the healthcare industry high? A high deductible health plan may not be appropriate for you. If you benefit from copays that allow you to see specialists and to get expensive medications at a lower cost, then this may not be appropriate for you, even if you're missing out on the HSA. So start with that question. But if you're relatively low, your usage of healthcare is relatively low, a high deductible health plan may be good for you, and then you can put in, up to ranges for single and family members and how old you are, but it's in the $4,000 to $10,000 per year range, and that comes off of your taxable income, which is good. And then it functions as like a medical expense emergency fund, which is also really good. As the years go by, if it's building and growing because you're not taking all of it out for medical expenses, it is investable and it eventually can be used as a retirement savings fund once you turn 65. So there's some viability to this, depending if it's good for your healthcare needs. But that aside, you want to choose a plan, a policy for health insurance that's good for you. If you have a spouse and they also have health insurance options, being on their plan versus them being on your plan, you look at the premiums and what they cost on your plan versus theirs. Try to find something that is manageable and that gives you that access to healthcare that is that you need. Related to the HSA is the FSA, the flexible spending account. The FSA also allows you to put in money on a tax-deductible basis. Again, you get to deduct the contribution from your taxable income, which reduces your tax liability. However, you have to be careful to make sure that you're putting funds in there that you're going to use this year, because you do not get to roll it forward every year. You must use the funds. There are some very limited exceptions, like you can use, like, I think it's like $500 can roll forward into January, February. But for the most part, you should consider that money, whatever you put in, you better plan to use it this year. So the FSA can be useful, but it's more limited in its functionality. Also, life insurance, group life insurance, group disability insurance. This is somewhat related to our conversation last week about guaranteed standard issue disability insurance policies. Remember that group disability is different from a GSI. Group disability is offered by your employer and they know about it. Often your employer does not know about the GSI, which, if you haven't listened, go back to part 3. That's a very important piece to understand. Group disability insurance is often provided whether or not you want it. And it's important that if you have a disability policy on your own, whether it's a GSI or a fully underwritten policy, you want your independent disability insurance agent to know what your group coverage is, because what you're allowed to have on the personal level is affected by what is provided for you on the group level. So they're related. It's important to have that conversation with your agent. It's another reason why it's so important to be working with an agent who knows what they're doing and is looking well beyond just selling you a product, because the product that they ultimately sell you has many ramifications, including this one that I mentioned to you. Group life insurance, sometimes there's like a minimum that's offered, and that's great. Getting supplemental, like purchasing it through your employer, that can be good, especially if you have significant health issues that would prevent you from getting your own coverage. But that aside, getting your own personal term life insurance policy is usually a better option, because you get to take it with you. And when you're at this stage in life, presumably relatively healthy, you can get a low rate and it comes with you. Whereas group coverage, it disappears once you leave that employer, and then you have to get your own later on when you're older, and then it's going to cost more money. So you want to keep that in mind too. So, and then look at all your other optional benefits. Sometimes there might be some like legal services, like getting estate planning done for a residency program. I've not seen that often, but if it's there and it doesn't cost very much, it might be worthwhile. The point is that as you go through that document, you want to be very slow about making sure that you understand what those benefits are. Even things that are not financially related directly, like paid time off. You're going to try to set aside time for going to visit family if you're living far away from them, or traveling to take a break. Try to be specific and intentional about that paid time off request, and do it soon so that you can plot out intern year. I've been told intern year is one of the most intensive. And so when you're going to have a break, make sure that you try to organize it at a time when it will benefit you, and you can go and do the things or have the experiences or the refreshment that you need in the way that's most suitable for you. So PTO, really important to address that and make sure you understand how it works. Somewhat related to this, it's not in the employer handbook, but that is when you're going to get paid. This is an important question to figure out if you're getting paid monthly, every 2 weeks, and when your first paycheck is. If you're getting paid for orientation, I sure hope you are, because you have to be there, right? A lot of the issues that trainees face is having to do with cash flow. We're going to be talking about cash flow next week in greater detail. But one of the questions as it relates to your employment details is, when am I getting my first paycheck? That is a very appropriate question to ask. If you're going to be coming in the third week of June, are you going to be getting a paycheck July 1st? Or are you getting paid July 15th? Find that out, because that's going to help you to lay out your cash flow needs between now and then, so that you're able to figure out how to pay for expenses and when you're going to start filling in your checking account with the income that you're about to earn. That's all for today. This was part 4. We've got 4 more. Let me tell you what they are: cash flow, emergency fund, investing, and estate planning. Next week, we're going to be talking about cash flow. Thanks for joining. We'll talk next week.